Hello everyone and welcome to this special video that we've put together especially for you guys who have booked in a call with our investment team. The reason for this is at the moment in the economy we're sure you've got several questions around not just investing with the NPP group but also investing in general. So we've put this video together for you using my thought process and knowledge in the area to try and combat some of the questions and answer some of the questions that you've got to really help you and our team have a productive call whenever you've booked it. So Mike, is it really the right time to be investing because interest rates have just gone up? Yes, you're right, interest rates have just gone up and we'll just say it's an ever-changing economy. The government have just made some moves and I do think there's some stability on the way through. But this is just really a matter of perspective when you're looking at the interest rates. Unfortunately, when myself or yourselves were looking at deals and we're trying to stack our next investments, they don't stack quite as well as they did 3 months ago when lending was a little bit cheaper and therefore your cash flow was higher. That is where we are. Hopefully we'll find some stability. It is our opinion that some of the lenders have been quite greedy with their interest rates in the short term, so we're hoping that we're going to find the new stability in buy-to-let lending over the next few weeks. That perspective piece though guys is very much lending, buy-to-let, mortgages etc. has been very cheap with the Bank of England base rate at an all-time low for quite some time now, and fundamentally we've just become accustomed to that, and now we're stacking our deals and comparing them to 6 months ago. Well, that comparison just isn't that useful because lending isn't that cheap anymore. When I first started in property 7 years ago, my first buy-to-let mortgage was around 5.9%. And I was just over the moon that I could get lending so I could start moving on my portfolio and start moving forward. Obvious to say, 3 years later, at the end of that fixed period, we accessed cheaper lending and off we could move again. But I think you've got to take the same sort of scenario here of the lending that you can access now is still reasonable. It's not as cheap as it was 6 months ago, but it does enable you to push on, leverage your investment and actually move forward with property. What if there is a house price crash like there was in 2007, 2008? Could now really be the time to buy with that looming? Well, with that question, we've really just got to go back quickly and study 2007, 2008 and recognise that there's nothing that's going on right now which is similar in relation to 2007, 2008. I wasn't investing at the time, but obviously done my reading on it since then. And the whole house pricing crash, the credit crunch, was around the availability of credit and the lending given very much willy-nilly by a lot of mortgage lenders in the market, 110% mortgages, massively over leveraged, and so the banks were lending way above the value of the property in the first place. And then when any sort of squeeze came on, the lenders realised that they had no way of clawing this money back. Then you had house foreclosures and banks pulling lending streams left, right and centre, trying to claw back their money. So that's what happened. If we just quickly compare that to how lenders are acting in this market, you'll see that it's actually vice versa, black and white, and they have, thank God, learnt their lessons. So as soon as there was any instability in the economy over here in the UK, what lenders have done is they've upped their interest rates, they've made it slightly more difficult, and obviously they've put a portion of profit in for themselves, but they've also dropped their loan to values to secure that position. They haven't sort of said, yeah, here's 110% mortgage. They've said, actually, we're only happy to lend at 70% or 65%. What they've also done is made it an even more robust criteria for those lending. Back 2007, 2008, anybody could get a 100% mortgage. Right now, trying to get a 75% buy-to-let mortgage is like trying to get blood out of a stone. I know I'm not selling you the concept of property investing with that, but it is becoming more and more difficult and more arduous. But actually what that does for us as investors is it knows that we're protected against the mistakes of the past because lending is having a more robust approach. I'm not convinced, Mike. Yeah, I just don't think it's the right time. And my question back to you is, okay, that's fine. What else are you going to do? And that's a theme of this video. It may not be that it's the right time for you to invest in property. Personally, I'm still investing. But the question is, what else are you going to do? Because here are some more facts to this scenario. Yes, the base rate's moved up a little bit, but you're still not getting much of a return in the bank, maybe 2-3% if you're lucky. Inflation is still up around 10%. And from everything that we can see as far as the economy, inflation is going to be here for quite a while, not just a flash in the pan, but for probably many years to come. So putting your money in the bank is a loss-making exercise at the moment. So what else are you going to do? Okay, so Mike, you're telling us that even with inflation high, it's the right thing to be doing to invest in property and take lending in the UK economy? Yes, that's exactly what I am saying to you. There is never a better time, in a strange way, than a high inflationary market, which we're in at the moment, to actually take positive good debt. Because if you take £100,000 worth of lending right now, say on a buy-to-let mortgage, inflation is actually eroding the value of your lending. So you lend 100 grand this year, but with inflation at 10%, the value of that lending is actually reduced. Now, over time in an inflationary market, the cost of everything goes up. And whilst you'll still owe 100 grand isn't what it used to be, and will continue to within that same formula. So yeah, it's a bit backwards, but getting positive debt, good debt, not just running up credit cards, but good debt in an inflationary market is a really smart move. Do we not think that there's going to be a real softening? There's a massive difference between softening and crash. And yeah, potentially, or no, definitely there is a softening. But let me just check in with you on this, because we've been having some long conversations in the office and we believe the market has already softened. Now, for those of you who've said in your head, well, I haven't heard that anywhere. Well, you just heard it here, and this is from people that are putting offers in on a daily basis, doing around 50 or 20 transactions every month and investing hours and your money on a regular basis. So we tend to see market change before the press, because the press are looking at metric that they've got through various sources, which is usually 3 months delayed. So no doubt 3 months time, there'll be a little bit of a hoopla around slow months in the property market, but we are already seeing a softening. Let me talk you through that softening though. A year ago, the market was at an all-time high, and when we were trying to secure deals, we wouldn't even really go and offer under asking, because we knew from experience and consistency that if we offered under asking, we'd just be washed out of the water. In fact, deals were getting closed at 10, 15, 20,000 pounds above asking price. So understanding where we needed to come in, the competitiveness in the market and the speed that the market was growing really was pretty substantial. Now, 6 months ago, that kind of shifted, and the £20,000 above asking price offers weren't there anymore. It was a competitively priced market, and offers were going in around asking. You very rarely got anything below, but you weren't having to pay 15, 20 grand over to close deals. So there was a little bit of an ease off, a little bit of a deflation of the market completely. Now, in this market today, and we're right at the end of October when I'm talking to you now, we are seeing a softening. And what I mean by the softening is, from where we were a year ago and even 6 months, we're now being even more competitive with our deals. So we're putting under asking price offers in and getting a competitive feedback loop with a vendor or with an estate agent. So yeah, they're interested in that. Or can you move back to, could you give them this? And there's a conversation going on, rather than previously it was like, oh sorry, it's gone. Somebody gave 15 grand over asking, bush, job done. We're getting direct to vendor on more deals, so there's slightly more pressure in the economy. Some people finding that they're in need of moving, maybe not wanting to pay estate agency fees as much as they were. So we are already in a softer market. Please bear some real comparability to this. We're in a softer market from where we've been 21, 2021, 2022, which has been a very strong and buoyant market. So I'm not saying we're in a crash, but the point is there going to be a softening and potential dip from where we've been? From the massive curve that we've been on? Yes, there will be. How do we know we're not in it? We don't. We don't know if we're in a dip now and whether prices are going to continue to grow or whether there's a little bit of room left in this softening market. My gut feeling is the deals that we're able to do now in this quarter, last quarter of 2022, first quarter of 2023, are probably the best deals that we'll be able to do. That might seem like a sales pitch, but there's only one thing that property has consistently taught me for 7 or 8 years, is that deals are never cheaper than they've been. I wish I'd bought more property 7 years ago. I wish I'd bought more property 6 years ago. I wish I'd bought more property 5 years ago, etc., etc., etc. What we do know, and again it's factual, go and look at the data, is that over time the UK property market only cycles upwards regardless of what it does. So my gut feeling is now's a good time to buy. We've talked about loads of factors around that, but the market has softened, there is opportunity, lending is still there, it's just not as cheap as it was a few months ago. So get out there, take action and keep progressing forward. But Mike, why are you so sure that there's not going to be a really significant slide of house prices? In the last year, 5,500 landlords have left the UK private rental sector. Predominantly, we think that is based around Section 24. Those of you guys on the other end should understand Section 24 taxes people quite significantly that hold property in their personal name. So if you built your portfolio over 7 years ago, you are probably getting stung with this. With everything else that's gone on, we've seen landlords exit the private rental sector, and therefore there's a lack of supply there. Now those properties haven't been picked up and pushed back into the private rental sector, so the private rental sector is actually lower than it has been ever before. There is also quite a significant amount of unused empty homes in the UK. Seems mental, but it's actually true. People just holding second properties, third properties, portfolios within families where people are doing nothing with it. Properties, this seems mental, but nobody knows who they own them. And yes, this stock is potentially good for us to try and get our hands on, but there are actually 640,000 empty homes. That's 2.6% of all homes in the UK empty. That is not a positive thing when you're looking at the supply nowhere near getting to the demand. On top of that, the government always talks a good game as far as planning, new build houses, conversions and developments. They like to talk about permitted development rights on this, that and the other. But I know from my own experience that it is very, very difficult to actually progress new build and conversion opportunities through planning to create new homes. Fundamentally, post-COVID, all planning departments are not actually staffed appropriately. So even if the legislation is positive, the process is elongated. So we've got loads of developers sitting with a huge amount of stock in planning and not just making it through at all. I will say, and I hope there's no planners on the other end, that there does seem to be a real chip on the shoulder of a lot of planners as well, and some of the objections and things that they're sticking in the way of progress in the UK, where we have a housing crisis, really is quite crazy, and the whole system seems a little bit broken and backwards. What does that mean to you guys? Because I'm sure there's plenty of you not looking to develop, but the point is the supply of houses is really not getting anywhere near the demand. The supply through new build and new conversion is stagnant and difficult. The supply from old landlords quitting the market is reducing. The supply, because of the amount of empty homes that people are just not using and bringing back to life, is poor. But the demand is ridiculous. And I will lay this out very simply, that we are in an increasing population because we're growing older, healthcare is better than it used to be, our general health is better, so people are growing older, plenty of people being born, and we're also opening our doors to immigration from all sides of the corners of the world where people are in need of coming into the UK to find a safe home. And that's a brilliant thing if we actually have the homes for them. So it's a real problem that we're creating through all the right values of opening our doors, but we're actually really failing on that supply. And lastly, the demand is still ridiculously high for people to want to invest in the UK property market. It's always been a very safe and tangible investment, and is still seen not just for us UK citizens, but for people all over the world that have set up a limited company within the UK and see the UK economy, UK property, as one place where you can deliver very positive cash flow and almost guaranteed capital appreciation over time. It's safe, it's tangible, it's insurable, and everything we've talked about with the bank, not quite the same as that. So the demand from investors from all over the world is still ridiculously high. So when you look at the lack of supply and the real need and demand from people in the country, investors from in the country and investors worldwide, this metric does not balance in an equation for the house prices to drop anywhere near significantly. And it's that will always come back to, which makes me pretty damn sure that we are not going towards a crash. Oh, well, I'm not convinced, Mike. That's fine. What else are you going to do? That's a question we've got to keep coming back to you guys with, because to be honest with you, if you have to take control of your own financial position, we've all got to take responsibility for where we are and investing your wealth, your savings, your hard earnings to create further income and financial stability for yourself, your family. The choices that you want to make in the future is something that we are massively passionate about, as I'm sure you can tell. So by all means, if you're not going to move forward with investing in property in the UK right now, then please do something. And if you find a better option, please let us know. Because one thing that I do want to remind you about the MPP group is there's plenty of ways in investing in property throughout the UK, but not many opportunities for you to be a really creative investor, to buy property as cheap as we can get our hands on, pay for our services for that, add value to the property through renovation, contracts, and create an existing asset that you've bought low, put refurb money into, put relevant contracts or relevant tenancies in, and then hold an existing asset over time. For those of you that are new to this game, please remember that by going through this creative process, even if it's not a case of buy, refurbish, refinance and pull all your money out, because it isn't 2009, it's 2022, what you are doing is creating a new value in the asset class. And there are asset buyers all over the world that will pour money into the UK and buy a property that has a fixed contract in it or a sustainable AST in it that they can purchase, and it will just cash flow them or yield them a relatively slow percentage. So I know it's difficult when you're working with lenders and mortgage brokers and everything's sort of fluid and changing, but the best thing about UK property is that there is bricks and mortar value, and there's also a value to a more substantial investor base, one that we can access as well. So please speak to the team about the maybe less tangible value that you're getting by creatively investing in property with the MPP group.